Assalamu alaikum. Welcome to lecture 19 of tax. So this is lecture is on the loss reliefs. Loss relief will include all the types of losses and how to get reliefs under this. This question you're definitely going to get in your tax exam because loss relief is one of the most popular question for your exam. So in this lecture, we are going to focus on continuing trades. First, trading loss. Then the loss relief for the trading loss. Then the pro forma of calculating the tax with the trading loss reliefs. The effect of the loss relief. Computational techniques. Then when you are ceasing trade, what are the loss relief? We get terminal loss relief when we cease trade. This is the older relief we get when we cease trade. Next are your other losses, property business losses, capital losses, and interaction of these losses with your trading loss relief. Then factors that influence the choice of your loss relief. And finally, we are going to conclude with the syllabus, summary, and technical articles. So loss relief, we have one side we have trading loss, on the other side we have other losses like property business, capital, and the interaction. Then choosing of the reliefs. Under trading loss, if you continue the trade, we are going to go through the reliefs, the pro forma, and when you cease the trade, the terminal loss relief. So trading loss, what is trading loss? Trading loss, you will adjust trading loss against your trading profit. Okay, so the process of adjustment is the same as for a profit, with capital allowance automatically forming part of the loss. If you are having a capital allowance, you deduct it from profit. But here if you are having a loss and if you are having a capital allowance, so it will increase your loss more. Understanding? So capital allowance is forming a part of your loss. So if you are having a trading loss, your tax adjusted trading profit will show nil. So this is an example 1 where we are having accounting loss before taxation. We add depreciation, entertaining customers, deduct non-trade interest receivable. All these were adjustments that we have done. Okay, all these are adjustments. Same as you used to do for the accounting profit before tax. Now finally you deduct capital allowance. So now you are having a tax adjusted trading loss. So in your TDP calculation, your tax adjusted trading loss, since it's loss, it will be 0. Now the loss relief. So a trading loss relief may be relieved in the following ways. Current year, current then prior year, current then carry forward. Current then prior then carry, or carry forward. So these are the ways. Now first let us go through each of the 5 reliefs. First is current year relief. This losses you will be setting against your total profit before your QCD. It is not possible to restrict the amount of loss relieved. Remember, this loss relief we have done for the sole trader also, unincorporated traders, right? Sole trader and partners. This one is for the company. Okay, this loss relief chapter is for the company. So it is not possible to restrict the amount of loss relieved. So the claim must be made for the whole loss. You have to make the claim, and it must be made within 2 years of the end of the loss making accounting period. Now next, current and prior. Any loss remaining after setting off against total profit of the current, you can carry it back and set off against total profit before QCD of the previous 12 months. The claim can only be made after a claim for the current year loss relief. Remember, first current year loss relief you have to make the claim, then only you can go back. There is also an optional relief, and any claim must be made. This is also an optional claim, optional relief to carry it back. Okay, any claim can be made within 2 years of the end of the 2 years. Everything is 2 years. Coming to the third relief, carrying forward. This also total profit before QCD. In fact, everything is total profit before QCD only. That's a good thing. You can memorize it easily. Here, when you're carrying it forward, you can do partial claim. Here it's possible. And you can restrict the amount of the loss that you want to get it relief so that you don't have to waste your QCD. Any unused will automatically be carried forward. So losses can be carried forward indefinitely. There is no fixed period. And to carry it forward, you don't have to make the current year or the prior year claim first. This claim also carrying forward you have to make within 2 years. Now, loss relief. The fourth, accounting period less than 12 months. If you're having an accounting period less than 12 months, what happens? No impact on the loss relief rules. If your loss making accounting period is less than 12 months, no relief, but the prior year relief is given for the preceding 12 months. When you go to the year before that, it is given for the preceding 12 months only. Therefore, if the loss making is preceded by an accounting period less than 12 months, that means before the loss making you are having a period less than 12 months. So you can take a year before that also to complete the 12 months. So this previous 12-month relief will be given in 2 accounting periods now on a LIFO basis. Last year first. Relief in the earliest accounting period is against the proportion of your total profit. Example 2. So we'll allocate to multiple accounting periods. Okay, here's a company that has an accounting reference date of 31st March and now it wants to change its accounting date to 31st December. If it's making a trading loss in the year ended 31st December 2024, this is how the relief will be given. Against the total profit of the year ended, against the total profit of the 9th month to 31st December. Why? Because you made the change after 31st December. So starting from 1st April to December, 9 months. And if you take the previous 9 months, you can go 3 months back to this year. So 3 of the 12 months of the total profit of 31st March 2023. And then against the future trading profit. 31st December 2025, 26, like that. And this is the pro forma with your trading loss relief. So we are having a loss in 2025. So now we'll show you how this can be utilized. So the first item that you have to enter is the trading profit. Now wherever the differences are, I'm going to highlight that area. So as you can see, the figures for 2024 and 26 has been given. By 2025, there is no trading profit. It will show 0. Why? Because you made a loss in 2025. So you see it's nil. Then property business profit. Under all 3 years we have, that's why it is denoted by X. Then the next is non-trade interest. All these are your income which we are adding them together. Next is your net chargeable gain. And finally, after you add all, you get your total profit for all the 3 years. Next. Now is the time where we are going to deduct our reliefs, loss relief. So first is your current year relief. That is from 2025 it will be deducted. Next, carry back relief in 2024 and then carry forward. But when you are carrying it forward, remember you can carry it forward to such an amount. That means you can restrict to preserve your QCD, qualifying charitable donation, in 2026. Then you deduct your charitable donation. Always your loss relief has to be deducted before your qualifying charitable donation from all the 3 years. Then you get your TTP on which we are going to pay our corporation tax. Now, what is the effects of this loss relief? So this pro forma, okay, this is a pro forma you need to remember. Now, the effect. So the loss relief will help you to reduce your TTB. That means you have to pay lower corporation tax. Then, where relief is given in earlier accounting periods, what happens? Refunds. You are going to get a refund of corporation tax. Now, the computational technique. So, the key to successfully relieving a trading loss is computational technique. So, in your exam question, will either require the amount of TTP or the corporation tax payable for several accounting periods. Like just now you have seen in the pro forma, they will give you for several accounting periods, taking into account the relief for a trading losses. Then, so the best this is achieved is by splitting the computations into stages. Stage 1, you calculate TTP incorporating the relief of loss and computation of tax payable or repayable if required. If the question asks you what is the tax payable or repayable, then you do. Otherwise, just calculate TTP after the loss relief. Then, computation of TTP incorporating loss relief. So, step 1. Just now, the pro forma that you have seen in 1.3, you need to set up it in a columnar format. Step 2. Insert the figure charitable donations, taxable profit because these are your known figure, and show the trading loss as nil. Step 3. Open up a working headed loss relief memorandum or loss relief memo. This is like your record of your loss relief, how much loss you have relieved and how much unrelieved losses are there. Now, step 4. Enter the amount of loss relief into the relevant places and calculate your DAV. So now computation of tax payable. The second stage is the calculation of your tax payable after loss relief. So as we have told you, where the relief arises in your early accounting period, your refund of tax will be ascertained by comparing the original tax with the tax arising after loss relief. That is your refund of tax. So activity 1. You have been given 2 years, 2023 and 2024. You started trading on 1st Jan 2023, preparing accounts to 31st December. So it's a 12-month period. So you have to assume that they are obtaining relief as quickly as possible. Calculate TTP for both accounting periods after giving effect to the loss relief. So you have a loss in 2023. This is your loss you are making 40,000. And then we have property business, bank interest, chargeable gain, qualifying charitable donation. So let us quickly solve activity 1. Now we need to set up the computations for two periods, 31st December 2023 and 31st December 2024. Okay. So here 31st December 2024. Now starting with trading profit. Trading profit or losses. So here it's 0 because you're having a loss this year, and here is your profit 52,000. Next, your other profits. So your property business profit 3,000 and 3,500. Next, bank interest. So when you're writing the bank interest receivable, when you're doing it for company, you have to write non-trade interest receivable. You have to mention that is non-trade interest. See, So now here it is 800 and 850. Next we have chargeable gain. 2,500 only for this year. And now we are going to add together everything, and this will be our total profit. So we are going to perform the sum function here. Now I'm going to drag it here. Now the reliefs. So first they told obtain the relief as quickly as possible. So first we are going to obtain the current year relief. Because without current year you cannot go to previous year. But for sole traders you can, it's optional. You can go either from current to previous or previous to current. But for companies, current year first and then previous year. So here when you're doing it for current year, remember you cannot uh, reduce this amount. You cannot preserve so that you do not waste your QCD. That you can't do in the current year, not in the previous year. But in the future year, when you carry it forward, there only you can reserve. So here you can't restrict. Here full you have to deduct under the current year relief. So what is the total amount of your loss? It is 40,000. So out of 40,000, 6,300 this year you will reduce. Okay. Now, so 6,300. And the next for 31st December 2024. Remember you have made a loss this year. So when you're carrying it forward, you can restrict some so that you can utilize your QCD. What is your QCD? That's 1,000. Okay. Now carry forward relief. Okay, never mind my spelling. So here from 40,000, 6,300. Now the balance minus 40,000 minus 6,300. Sorry, plus 6,300. So 33,700 you have to deduct the difference. Now we are going to do the sum function. It's from here. See, 22,650. Now we are going to deduct QCD. QCD. So here the QCD is 1,000. It's 1,000 minus 1,000. It's the same. And your TTP would be the sum function. So here, but you have to show it as 0. So here it is 21,650. Now remember, you need a memo. Loss relief memo is needed. So when you're making a memo, loss relief memo. Okay. So here is your loss. What is your loss? 40,000. 40,000 is your loss. So you're setting against current year relief. $6,300. Now what's balance? So let us keep the balance. It is 33,700. Out of this 33,700, you'll utilize this against your carry forward. And you have to write the years also. So finally it's nil. You have utilized all the loss. There is nothing to be carried forward. Now, moving on to the next question, 2A, trading loss relief. Here they have changed the accounting date from December to September. Earlier it was 31st December. Now it is 30th September from 2023. So you have been given the accounts. First and the third one is okay because it's 12 months. The middle part where you have changed, it is for 9 months. Short accounting period. So you have to apportion. Okay. So you have been given trading profit, property, bank interest, chargeable, QCD. Same like before, except this time we have one short period. So you have to calculate TTP after giving effect to loss relief. So now let us quickly do that. So we have to draw this table here. So what I'm going to do is just take this and I'm going to copy paste this here. Okay. And here one more column I need to add. Okay. So here it is 31st December 2022. Year ended. Year ended 31st December 2022. This one is 9 months to 30th September 2023. And this one is year ended 31st December 2024. So I'm just going to change the figure. So if you see here, what is your loss making? In the last 90,000. So 50. Here you are going to write 50,000. And here 62,000. And here it will be nil, 0. Next is your property. So property is 3,100 here. 3,200 and 3,800. Next we have non-trade interest here. So non-trade interest 950, 1,000 and 600. Next we have chargeable gain. So chargeable gain is only here 3,500. And your total profit is already calculated since I've done the sum function already before. I've just copy pasted it with the formula. But here it's to be done. Okay. So now I'm going to get the relief. First, current year relief. So when I'm taking the current year relief, here, full 7,900 I have to deduct. You cannot save some to preserve your QCD in the current year. So full 7,900. Okay. Then, what is your total amount of loss? If you see is 90,000. Then you can carry back. You are going to carry back. Okay. When you are carrying back, if you see this, it's 9 months. So 9 months from here and 3 months from here, you can carry back. Okay. So now when you're carrying back, also you can utilize your QCD. It will be 66,200. So carry back relief. Nothing to carry forward. Okay. Under carry back relief. Okay. It is 66,200. So this full amount of total profit you have to deduct. Meanwhile, you have to do your memo here. What is the loss? 90,000. Current year, how much you're reducing? 7,900. And then 66,200 carry back. 66,200. You still have 15,900 left. Here. So sometimes you have to carry forward even after utilizing against carrying back, but sometimes the whole amount might be utilized here. We need to do our working here. Okay. See, when we are taking the profit, this total profit, we can only utilize 3 months of this profit against this. So if you calculate somewhere 3 months of this, and what is the amount that you have to utilize? 15,900, but you can only utilize 13,513. 13,513. So this will be the amount. You have to see that after this, you see from 15,900, if you utilize this, still you have some amount that is left that you will carry forward. Okay. After 31st December 2024 to 31st December 2025, the next year. So now you'll be carrying back 13,513 minus. Okay, that comes under carrying back relief. Now the total. So here it would be 02. So now comes your QCD. Okay, it's 1,000 for all the years. And your TTP is the sum function. So this is your TTP only for this you have 39,537. And now when you are taking against this 13,513, so you still have 2,387 unrelieved loss carried forward. This is your unrelieved loss which you will carry forward. Now moving on to the next question, activity 2B. So this is about tax refund due to loss relief. So as in activity 2A, now paid the following amounts of corporation tax before taking into account the relief as shown in part A. This is 2B. So here for year ended and 9 months they have given. Calculate the amount of corporation tax repayable for all the relevant accounting periods. The corporation tax rate for 2021 and 22 was 19%. So now let us do that. So when I go here, what I'm going to do is, here I don't need the memo, I'll just copy paste it here. Okay, now 12 months to 31st December 2022 and 9 months to 30th September 2023. So you need to calculate the amount of corporation tax repayable for all the relevant accounting periods. Okay, the amount where it will be repayable. So you have went back. Remember the current year, you have made loss in this year. So this year is the current year. Here you will not be refunded. But when you're going back, you must have paid tax this time. You must have paid more tax. But now due to loss relief, your TTP is reduced. Now you're going to get refund only during this 2 period, not here. Okay, so this will be deleted. Now the earlier periods. Okay, so now we are going to calculate the corporation tax. How are you going to do that? Tax on TTP after loss relief. So here tax after loss relief. So if you go in the previous one, you see here you are having a TTP. On this you have to pay the tax. But here it is 0. No tax. So here it is 39,537 into 19%. Drop down the decimal. 7512. Now tax paid before the loss relief. So what is the tax paid before the loss relief? This is after loss relief, right? So now tax paid before loss relief. So you need to go back. If you did not relieve your tax, look at your total profit. It is this. Okay. And from here, you would be deducting 1000 QCD, and then you would be paying 19%. So let us do that. Okay, 54,050, deduct the QCD. On this, you would be paying 19%. Minus 19%. So this is the tax you would have paid before loss relief. Okay. Now, repayable. The difference. So you see, before loss relief, you are paying more tax. You have paid more tax, but after relief, your tax should have been this much. So it is simply the difference that is repayable to you. 2567. This is the amount that is repayable to you. Next, for the 9 months to 30th September 2023. This period. So this period will go here and see. It was 66,200 total profit. So from here we are going to deduct 1000 QCD and find into 19%. Twelve three 88. Is this correct? This cannot be fully correct. Look at the date. Can you just apply 19% how you have done here? No. This falls partly in FY 2022 and partly FY 2023. So here January, February, March, 3 months falls in FY, 3 months FY 2022. 19% rate out of the 9 months. Okay, the remaining 6 months FY 2023. So FY 2023, there are two rates: 19% small profit rate and main rate 25%. If your profit is less than 50,000, it's 19. If it's more than, so if you see this, it is 66,200. If you deduct 1000, it would be 65,200, more than 50,000. So we are going to apply the 25% corporation tax. And it is 65,200, the profit. So when you're doing it, you have to take this for 3 months. 3 divided by 6. Keep this, and here this into 25% into 6 divided by 9. Sorry, this is 3 divided by 9. Oh, there is one more thing. Another mistake I've made. There is a marginal relief. You'll be eligible to marginal relief. Why? Because this 65,200 is more than 50,000 but less than 250,000. That's between the rate, lower and the upper. So you are going to get marginal relief. for FY 2023, not FY 2022. So here you have to separately do the working. How? We are taking, this is your TDP, into this we are going to apply 19%, and you have to take it for 3 months out of the 9. Okay, now here this I take it here 4129. Here when I do, so on this I'm going to apply 25% into 6 months. Now marginal relief I'm going to reduce. Since I have not received any dividend, so what would be my marginal relief? Remember, my upper limit also will get changed because I have a short time accounting period here. So it will be 250,000 for 9 months. $187,500. So here when I do, it's the upper limit minus my DTB into 3 divided by 200 standard fraction. So this I need to deduct this minus this. So now I'm going to add. Remember this, because it's two different financial add. Wait. So now I have changed it. And as this, well, there is a mistake with this. It is supposed to be 13,610. So, well, I have done what most of the candidates used to do this in the exam. The figures have been already given here. The corporation tax. You see how much time did I waste in finding out this. So isn't it exactly the same thing I've got? I've got 10,080, the roundup figure. You see here? I was trying to do it by myself. That's what I've got here. You see this figure. So already the figure is given, so you don't have to waste your time to find the corporation tax. They have given this. For the 9 months, it is 13,610. So it is somewhere an issue, but definitely you can work this out on your own and see, are you getting 13,610. Okay, that is, you are going to get a marginal relief and then deduct, and you are going to get, we are very close to it, but never mind, it's given here, so we have to deduct it. Okay, so 13,610. So the difference would be the amount of repayment. So these are the answer for activity 1. You can see that we have the current year fully we have covered and the balance from the carry forward, having TDP only for 2024. Now, so this is the loss relief memorandum that we have to do for almost all the loss relief question, whether it is for sole trader or whether the loss relief is for companies. This will help you to know how much is your loss unrelieved. Then we went through activity 2A. We have a short accounting period. So 9 months from here, when we carried back this, and 3 months, remaining 3 months we have utilized against this. And this is the result. So when we are carrying back, okay, we take 3 months of this and utilized. So this is your loss relief memo. We have this 2387 unrelieved. Then we have activity 2B. It is from your activity 2A, but this time we are going to get tax refund if your corporation taxes this too for this 2 period. What is the tax refund? So all you need to do is find your tax before relief and after relief, after the loss relief. So we have done, and this are your amount of repayable. Now this are for your continuing trades. Now we are moving on to cessation of trade. When we are ceasing trade, we are going to get one relief that is only available when you're ceasing trade. That is known as terminal loss relief. How does this terminal loss relief works? This terminal loss relief is relieving your trading loss of the last 12 months of trading. Last 12 months. So when a company ceases trading, relief is applied as follows. Loss of the last accounting period is relieved against the total profit of the same period under the current year rules, and terminal loss is relieved against your total profit before QCD. Everything is before QCD of 3 years on a LIFO basis. So you go 3 years back before the loss making year, 3 years back on a LIFO basis. So now, where a company has prepared accounts for period other than 12 months, let's say less than 12 months, then you can go more than 3 years back. You have to apportion your profit also in the same way as for normal carryback claim, so that losses are relieved only against profit arising in the previous 36 months, not more than that. So terminal loss relief should be claimed within 2 years of cessation of trade, 2 years. If the date of the cessation does not coincide with your normal year end date, okay, then the last accounting period will be less than 12 months. So the terminal loss will compromise the trading loss of the last accounting period. A question would not be said where there is a loss in the preceding accounting period. They will not ask that. Only in the last year they will give you the loss. Now, so where the short accounting period is during the 3 years preceding the loss making period, you have to apportion the profit in the same way as normal carryback claim. So the losses are only carried back against profit arising in the previous 36 months. With that understanding, let us do activity 3. Okay, you have been given and you are making the loss here the last year. All a year ended 31st December. So you can carry back up to 36 months, you can go back. Okay, trading profit, other profit and QCD are given. Calculate profit chargeable to corporation tax for all the accounting periods after taking into account the relief of trading loss. You need to calculate the profit chargeable to corporation tax. That means total profit, your TTP. So let us quickly do activity 3. So now for activity 3, we will be drawing up the 4 years 2021, 22, 23 and 24. 2021, 22, 23 and 24. Now we will be writing the trading profit. So the trading profit 500, 250, and 100. And here it will be 0 because you are having a loss. Then we have other profits. So other profits is 10,000 and 5,000. And now we will be getting our total profit. So total profit is the sum of your trading profit and other profit. Now, so we will be having the current year relief and then the terminal loss relief. So first the current relief, and see, because 2024 is your last accounting period, here you will be given the terminal loss instead of normal 12 months carryback. Okay. So we have the current year and then the terminal loss. So current year is the total loss is 300,000. So the current year loss is here 5,000. And then we have the terminal loss relief. So terminal loss relief, you can carry back up to 36 months. That means 3 years back. So here 2023 we have 110. So it will be 110,000. And here the balance. So out of your 300 loss, 110 you have utilized in 2023 and 5,000 you have utilized in 2024. The balance is 185,000. This 185,000 will be utilized in 2022. So it's minus 185,000. Now we will be taking the sum function. So now we have our QCD to deduct, which is 20,000. And then finally your TTP. So here it would be nil and here it would be nil. Now you need a loss memo, right? So loss memo would be here. You have 300,000 loss. You utilizing in the current year 5,000. Then terminal 110 first. Then 185,000. Okay, so you don't have anything to be carried forward, everything utilized. And you can't carry it forward also because you are ceasing trading on 2024. So this is the answer for activity 3. So as you can see, in this 2 period your QCD is wasted. And here is your loss memo. So everything is utilized. You do not have anything to be carried forward. Now, example 3. Terminal loss with short accounting period. So assuming a normal accounting date of 31st March and you will cease trading on 31st December 2024. So the terminal loss can be relieved like this, 36 months. Okay. So this is your normal accounting. 31st March, you have ceased trading on 31st December. If you see, it's 9 months, right? So, and you can claim up to 36 months. So now, A is your trading loss of the last accounting period after relief against total profit of that period. So the loss A is relieved against the total profit of the same year under the current year rules. And the terminal loss can be carried back against total profit of the 3 years preceding the loss-making period. That is till 31st March 2021 to 31st March 2024. This 9 months loss you can utilize against this time period. Now, example 4. Here you are ceasing trading on 31st December 2024. Okay. So now the loss A, if you see this, you can relieve against total profit of the same year, and terminal loss can be carried back 3 years. As the period immediately preceding the loss is only 9 months, you see A, if you go back, it is 9 months before it. So the terminal loss can be offset against 3 months of the year ended 31st March 2021. So when you go back to here, okay, you can go 3 months back. You can extend this. Before it was 31st March 2021, no issue. Now you can go back. If you take exactly 3 years, so it is 31st December 2021 to 31st December 2024, right? Now, because we have 9 months here, so everything is now March end, and here it is December. So you can go 3 months, you see here, 3 months of the year ended 31st March 2021. Your terminal loss you can use to offset against this period. Now we'll do a question. Activity 4, where you are supposed to calculate TTP after relieving the trading loss and state the amount for which no tax relief is given. State any amount. So they have ceased trading on 31st December 2024. Now they have made a loss of 420. So you have bank interest and QCD and adjusted profit. Okay, before this period it was 9 months. That's from March to December. So let us solve this. So for this question, we are going to draw up this table here. Year ended 31st March 2021. Here, year ended 31st March 2022. Year ended 31st March 2023. And here, so here it is year ended 31st December 2024. And here it is 9 months. 31st December 2024. 23. Nine months to 31st December 2023, that is March to December. So now we are going to have our trading profit. 120,000, 150,000, 100,000, 50,000, and here is zero because you have trading loss. Then we have non-trade interest. So non-trade interest is 12,000, 10,000, 8,000, 6,000, and 3,000. Then we have our total profit. Okay, from here we are going to deduct our current year and terminal loss. So here now we have loss relief, current year and terminal loss. So current year we are going to, what is the loss? Loss is 420. Current year we are going to go here. Okay, this is okay. Now this is the current year. So here we are going to deduct 3,000 under your current year relief. Then the rest all are your terminal loss relief. So your terminal loss relief would be this entire amount you can reduce, which is 56,000. Okay, even this you can entirely reduce, 108,000. Still we can go back and reduce this 160,000. So you have to see, did you utilize the 36 months or not? Okay, the problem comes here. Here you have to be careful. Okay, so while you're doing, it's better to have a loss memo. Now, so your loss, what is the loss you have? 420. Current year you're utilizing 3,000. Okay, then in the 9 months you're utilizing 56,000. Then you have utilized 108. So you have utilized 56, then 108,000. Then you have utilized 160,000. And then when you are utilizing, okay, so 93,000. Now one more you have here, how much you can utilize against this one. Remember, when we went back, we have taken 9 months, 12 months and 12 months. So when we add together, still 3 months are left. That 3 months we can take from here. We can't utilize the entire year, but 3 months of this total profit you can utilize. So that would be minus 3 divided by 12 into this. So you can utilize up to 33,000 only, and hence, so 33,000. So 60,000 is your unrelieved loss that you have to carry forward. Now, what is the QCD? Your QCD is 44. So in this case, it's 4,000. Here, it is wasted, no QCD. In this case, also wasted. No, you're not eligible. You did not waste this year because you don't have any QCD. And here also, it is wasted. Okay, so your TTP is 95,000 only for year ended 31st March 2021. Now, 60,000 is your unrelieved loss. This. Now, coming to part B, state any amounts for which no tax relief is given. That is on this 60,000. And also the QCD that you have wasted, this and this, that is your 4,000 and 2,000, this also will never be relieved. As well as your 60,000 trading loss will never be relieved. You cannot carry it forward because you have ceased trading. So the answer for activity 4, we only have one TTP of 95,000 and we have wasted this to QCD which will never be relieved, and this 60,000 also will be unrelieved in part B. Moving on to the next loss. So from trading loss, now we are moving on to the next type of loss, that is property business losses. This loss happens when your expenses are more than your income from the property, and it will be relieved against the total profit of the same accounting period. Remember, this is automatic and is mandatory. And total profits of future accounting period provided the property business continues. If your property business continues, then only you can relieve it against the total profit. Now, you can claim to carry the loss forward, and it can be partial so that you can avoid wasting QCD, and the claim must be made within 2 years. Property business loss cannot be carried back. Remember this thing. Unlike trading loss, your property business losses, you cannot carry it back. If property business loss and trading losses are incurred in the same accounting period, which loss should be set off first? Property business loss. Why? You can't carry it back. It's more restricted than trading losses. Trading losses has more options in fact. Now the next loss, capital losses. Capital losses are set off against current first and then future chargeable gains. Please let me repeat this. They are not set against your total income. Capital loss with capital gain. First current, then future. And like your property losses, this also you cannot carry it back to earlier periods. Now you can set off against income. So relief is automatic, no claim is required, and partial claims are not allowed. This is even more strict than property business loss. Okay. Here relief is automatic, you don't have to make any claim, and partial claims are not allowed. So interactions of the losses, other losses with your trading loss. So when there are trading loss, capital loss, and property loss arise in the same question, in which order should you get the losses relieved? First, capital loss, current and brought forward. Next, trading loss brought forward. Then current property business loss. Then current and your later trading losses. So this order gives priority to relief, where the rules of the loss relief are more restrictive, and for earlier losses before later losses. The loss reliefs are applied in the most favorable way. So make sure that you follow this order. This is most tax efficient. Now moving on to the factors that influence the choice of loss relief. So with the introduction of two-tier corporation tax system, earlier there were one rate only. Now there are two rates. So the most important factor before you choose the loss relief or even the group relief. By the way, group we are going to do it in the next lecture, lecture 20. There you will go through group reliefs in detail. That happens when you're in a group company. Then you get an additional relief known as group relief. If you're an individual company, group relief is not available to you. So coming back to this, considering loss relief and group relief claims will generally be the rate at which relief can be obtained. So you would want to see the rate. Most important thing is the corporation tax rate. That is your factor in deciding which loss relief you want it to be first. So other generally less important factors could be your timing and cash flow. Of course, getting loss relief sooner is better because if you are getting it early as possible, you can get a repayment of tax. Usually, a company that is making losses, they will be experiencing poor cash flow. So, getting a repayment of tax can boost their cash flow. The tax that they have already paid, now that they're going to get repayment of tax. How? See, earlier on your TTP you are paying tax. Now because of loss relief, you come back and you adjust the loss relief, your TTP reduces because of that loss relief. That means your TTP reduces. So you should be paying lower tax, but you already paid in the past. So the difference between the amount that you paid and you should have paid, that is your repayment of tax. This you are going to receive. So as compared to carrying loss forward for a future tax reduction. If you carry forward the loss, currently you are not going to get any advantage. Advantage you will get in the future only. Okay. So from the point of cash flow, it's good if you get it as early as possible. Next, your QCD. Whether this should be wasted or not should also be considered. So there are three things you have to see now. What is it? One is your corporation tax rate. Two is your repayment. Getting early is better because of repayment. Three, to see whether are you wasting QCD or not. It is better not to waste your QCD because QCD will never be relieved. But losses you can carry forward if you have the option of carrying forward. So these are the three factors. You need to remember these three factors in your exam because most often they also after a calculation part they ask you a discussion question like this. What are the factors? Why did you choose the relief that you have chosen in part A like that? Now, so there are two important considerations for exam in the period 1st June 2025 to 31st March 2026. That is the time period relevant for you. Any claim made against your total profit before 1st April 2023 will obtain relief only at 19%. Remember this date very well. Before 1st April 2023, any claim against total profit relief is only at 19%. And your current and the prior year loss relief against total profit cannot be restricted. It has to be full claim. Either you're claiming the full amount or nothing at all. But when it comes to group relief, there are more flexibility. This we'll cover in the next lecture, lecture 20. And also, loss relief against future total profit, it's more flexible. But when it comes to current and the prior year, you cannot restrict. Also, loss relief claim against loss relief claim against future total profit can be restricted. How? In order to preserve your QCD. It's not a must that you can't restrict, but if you want, you can. Or you want to restrict to set against the future profit which will subject to higher rate of tax. Let's say the tax in the future will be more than tax rate currently. So better to set off in the future, because you why to pay high rate of tax in the future. Okay, so in that case you can restrict loss relief against total profit, future total profit, not current or prior year. Now, if relief can be restricted, then claim initially against profit subject to the marginal rate, that is 26.5. Claim against this rate. So the rate will vary slightly if company has dividend that are not 51% group companies. The amount relieved should be subject to bring your augmented down to lower limit. Okay, the amount that is relieved means it should bring your augmented to lower limit. So you pay lower tax, because at a higher rate you have to pay 25%, lower rate 19%. So first try to bring down to the lower limit. The next relief that you are going to get is against the profit that is subject to 25% corporation tax. So first try to bring it at 26.5% rate, because you're going to get a marginal relief. Next, try to bring your augmented profit down to a lower limit so that it's taxed at 19%. The next relief, the third relief, is profit which is subject to 25% corporation tax. If you cannot restrict the relief, then the order of set off will be more difficult. You can't set off this order. This order you can only set off when relief can be restricted. So obtaining relief at the full rate 25% may be preferable given that the overall corporation tax, where the marginal rate of apply will always be less than 25%. Okay. Now, further group relief constitutions of factors influencing choice of loss relief will be covered in lecture 20. So for group relief, we will cover that in lecture 20 itself with the groups. Example 5. So here, year ended is 31st March 2023, 24, 25, no short accounting period. You have a loss in between this time, and you have bank interests, chargeable gain, and QCD. Now, so B Limited could either carry the loss back or carry the loss forward. So we'll see both the scenarios. Which one is most effective in this case? We'll do both. We'll carry back and see, and we'll take forward and see. So let us carry it back first. Okay. So this three columns I do not need. I'm just going to delete it. And then with loss relief and without loss relief. Now, this is when we are carrying back the loss. So the trading profit is 75,000 here. Here also it would be 75,000. See, we are carrying it back to 31st March 2023. Then we have chargeable gain. Chargeable gain of 5,000. So without relief also, it's 5,000. Then it's our total profit, 80,000. Now we are going to deduct the loss relief from here. Okay. So once you deduct here it would be 0. And here it would be 80,000. So what happened? QCD. Here QCD is wasted. Okay, here the QCD is 3000. And your TTP here would be 7,000. And your corporation tax at what rate? 2023. So it would be at 19%. So 19% into 77. See, without loss relief, you have to pay this, and with loss relief, you don't have to pay any corporation tax. It is 0. So your full corporation tax of 14,633 is saved. So what is the saving? So you can get it in another way rather than doing this. If you take this 80,000, okay, the total profit with loss. Okay, so 80,000. So we are going to take 19% into 80,000 and 19% of the QCD that is wasted, 3,000. This is the QCD. This is the saving. Okay, this is wasted. So it would be this minus this. So you see this and this, they are the same. But this is easier. This is in one go you could get, and this is more lengthier work. Okay, in your exam you can do anyway. Okay, now when you are carrying the loss forward to 31st March 2025, so this time your trading profit will be 250,000. Okay, without loss trading also is the same. Then we have bank interest. Bank interest 10,000. And hence the total profit. So now we are going to deduct our loss relief. What is the loss for 2024? 80,000. So 80,000 will deduct from here. This is carry forward. So when we carry it forward, this. Okay, it's 180 and 260. And the corporation tax, when you carry it forward to 2025, remember the rate would be 25% corporation tax, and we don't have any QCD. So your corporation tax would be 25%. Okay. So 25% of 180 and 260. So it's 45,000 and 65,000. Now, if you say this is no issue, 180. This is between your lower and upper limit. Lower is 50, upper is 250. So it's between this. So because your TTP is between that, you are going to get a marginal relief that you have to deduct with your corporation tax 45,000. How much? So marginal, but without the relief, you are not going to get the marginal relief. Why? Because it is 260. It's more than upper limit 250. So no marginal relief. And we don't have any dividend. So it would be equal to your upper limit 250,000 minus your TTP into the standard fraction 3 divided by 200. Done. So now this minus this. So this is your corporation tax. Now if you see, what is the relief that you are getting? It is the difference between this and this. So it is this 65,000 without relief minus this 210 50. But there is another way of finding this out. And if you see here in the first one, when you carry it back, this much you are saving, and when you're carrying it forward, you are saving this much. So which is better? It is better to carry it forward because you're saving more. Okay. Now there is another way. What is it? Getting this 21,050. That is, so just take the upper limit 250,000, deduct 180, and apply it into 26.5%. 26.5% because marginal relief is available for it. That's why we took 26.5. Next, what's next? And so here it is the loss relief 80,000. Okay, the difference without relief, this 80,000 is not there, and minus the difference. If you take 260 and 180, the difference is 70,000. So this into 25%. Now you'll be adding the two, and you are getting the same figure as this. You see, so with relief you are saving 70,000. You are getting lesser TTP, 70,000 less TTP, and also 80,000 relief. So the difference at 25%. You are going to save. This is tax saving. When you are doing tax saving, you are working on the difference, the margin. So if you see which is better, carrying it back or carrying it forward, carrying it forward is better because you're saving more versus carrying it back. Why is that? Because if you see the tax rates, and also you are wasting QCD when you are carrying it back, the 3,000 you have wasted. That's why you are saving more tax when you're carrying it forward. Because you are saving tax at a higher rate when you are carrying it forward to 31st March 2025. So the answer for example 5, when we are carrying it back, we have wasted QCD, okay, but we are saving tax 14,630. If we see the corporation tax, we don't have to pay anything under loss relief, but without relief, we were paying 14,630, the difference. Another way of finding out is, so the loss relief is 80, That means you are saving tax because of this loss of 80,000, 19%, because it was 2023, and the 3,000 QCD that you have wasted. So deduct 15,200 and 570, you will still be getting 14,630. Now, when you carry it forward to 31st March 2025, what happened? This is the tax you have to pay with relief, and this is without relief. The difference is the tax saving. Okay. Now, there is another way of finding it out. That is this: the upper limit minus 180. That is your TDP into 26.5%. Okay. And then this is the loss relief with this deduction. The difference would be taxed at 25%. It is the same, 21,050. Okay. So you are saving more tax when you are carrying it forward. Now, so we have touched section E, corporation tax. Under TTP, we understood how property business loss is relieved, then how trading losses are carried forward, how trading losses are claimed against income of the current and the previous accounting period, then recognize factors that will influence the choice of loss relief, then the exemptions. So the use of exemptions within all of the above sections, that is 1 to 5 of Part E concerning corporation tax. So let us summarize. Trading loss you can relieve against your total profit, current year, current then prior, current then carry forward, current then prior then carry forward, or just simply carry forward. Then losses has to be relieved against total profit before QCD. And current year, when you're doing current year relief, you cannot restrict. Okay, there is no partial claim. That means you are going to waste your QCD. And prior relief claim, this can only be made after your current year claim. And here also no partial claim. So if your loss making period is preceded by an accounting that is less than 12 months, less than 9 months, you can carry back, remember, to previous 12 months. So 9 months of the previous and 3 months before that. So your relief will be given in two accounting periods on a LIFO basis. Last in, first out. Latest year first and then before. Now carry forward. To carry forward, you don't have to make the current or the prior year claim first. You can just simply carry forward. And here there's a flexibility. You can do partial claim to avoid wasting your QCD. This claim you have to make within 2 years in the period in which loss is relieved. Then a terminal loss where you are going to get your relieved against the profit of total profit of 36 months before the last accounting on a LIFO basis. Okay, provided it is first set against the current total profit, then you can carry back. So this is when you're ceasing trading, this terminal loss is available. And property business loss, again it can be relieved against total profit. Mandatory, you have to relieve it against the same accounting period and then future accounting period. You cannot carry it back. And when you carry it forward, you can make partial claims. Capital loss can be set off against current and future chargeable gains, not total profit. You cannot carry them back, nor you can set them against income, no partial claim. So when all the three losses comes together, trading, capital, property, this is the order you have to get it relieved. First capital, then trading, then current and future trading losses. Then, so the loss relief will generally be structured to get the relief at the highest rate of tax soon rather than later. And also you have to include cash flow as well as the extent to which you are going to waste your QCD. This you have to take into consideration when you are choosing the types of loss relief, whether to carry it forward or carry it back or current year. So in this lecture, there are no technical articles you have to read. So thank you for watching, and I shall see you in the next lecture The next lecture is going to be the last lecture under corporation tax, because with that I'm going to finish corporation tax before I move on to inheritance tax. So the next lecture will be focusing on your groups, all your groups, group relief. So make sure that you watch my other lectures as well. They are the previous 3 lectures under corporation, that is 16, 17, 18, and also from lecture 1 where I finished my income tax as well as the CGT, capital gain tax.